At this very moment, if you open your trading software, that number must be wildly jumping, $99,850, just $150 away from that most symbolically significant milestone in human financial history, Bitcoin. $100,000 threshold. Social media worldwide has gone crazy. Twitter, trending top is number BTC 100K. CNBC hosts have champagne ready in the studio. All WeChat groups and Telegram channels are celebrating, as if the gates to financial freedom have completely opened. Just cross this threshold and enter a brand new, decentralized, brave new world. But friends, please stop that hand about to click buy right now. Force that heart racing from adrenaline surges back into your chest cavity. If you've followed my channel long enough, you know that whenever the whole world celebrates, what I see is never fireworks. It is the crosshairs of a hunting rifle. Now, I want you to turn off those colorful candlestick charts. Turn off those influencer live streams, just shouting calls. I am taking you to see the real battlefield, the level 3 data hidden deep in exchanges that ordinary retail investors simply cannot see. What can you see? Behind this seemingly sky-bound price, an extremely bizarre phenomenon appears on depth charts of the world. S3 largest cryptocurrency exchanges, though prices approach $100K, spot buy order thickness is visibly disappearing. Yes, you heard right. Price is rising, but real capital willing to catch at this price is retreating. In finance, this has an extremely terrifying name, Liquidity Vacuum Pump. What does this mean? It means current rises aren't because many are buying, but because sellers, temporarily, withdrew orders. It is like someone pumping out air, making a balloon rapidly expand in vacuum. It looks big, but just one needle, even the thinnest needle, pricks it. It 1T slowly deflate, but instantly explode. So who is creating this vacuum? And who is preparing that needle? Let us shift our gaze from price to more secretive on-chain data. This is my conclusion after analyzing 2,000 whale wallets all last night. A conclusion that still sends chills down my spine. In the past 48 hours, as Bitcoin surged from $95,000 toward $99,000, retail addresses, wallets holding less than 0.1 BTC, saw frantic net inflows, hitting new highs since 2021. But super whale addresses holding over 1,000 BTC and those cold wallet addresses marked institutional custody, their on-chain activity is abnormally quiet. Quiet as a graveyard, no, more accurately, they were not motionless, but performing an operation called dark pool swap. Data monitoring shows that just last night alone, Bitcoin worth over $8 billion transferred from cold wallets to Coinbase Prime and Fidelity Digital Assets, ODC over. The counter, desks, got it. These $8 billion didn't directly slam into exchange order books, otherwise prices would be collapsed already. They were quietly transported off. Exchange like ammunition quietly delivered to frontline bunkers. This explains why you still see prices rising. Wall Street's top traders are using this final emotional frenzy, using your faith in $100K to wholesale. These chips off exchange through private agreements to ETF passive funds eager to enter and uninformed retail investors. This is perfect, hand-changing. Left hand, you frantically rushing in, fearing missing out. Right hand, them knives long sharpened, preparing to exit. At this critical juncture, why? Why do they choose to exit at this seemingly excellent moment? This must mention that sword of Damocles hanging over all our heads. The Digital Asset Market Structure Act, DAMS 2.0. Going to vote this afternoon Washington time. How did mainstream media tell you? They said this is bullish, said this represents cryptocurrency finally being accepted by mainstream society, said this is the first step of compliance, Bitcoin's coronation as digital gold. Dead wrong. If you actually read that 400-page bill draft, like I did last night, you discover this isn't any coronation. This is a surrender order, even arguably a death sentence for the native crypto world. Section 303 of the bill explicitly stipulates all crypto service providers involving USD deposits, withdrawals must conduct penetrative identity authentication for non-custodial wallets, your own private key wallets. Understand this statement's lethality. What is Bitcoin's core value? Censorship resistance, decentralization. But if this bill passes, it means if you want to convert your coins to dollars to buy houses, cars, bread, you must prove to banks that every coin in your wallet has clean origins. And once you cannot prove, or rather, once banks believe you cannot prove, your assets will be frozen on chain. Having private keys is useless because you've lost your off ramp. Current Bitcoin is like a cornered beast driven into a cage. $100,000 is the most enticing bait on that cage. Wall Street knows this too well. They push prices here precisely to create that time waits for no one panic, making you rush in recklessly for that last bit of gain. And the moment you rush in, that iron cage gate called DAMS 2.0 will slam down. You think you are buying tickets to the future, but actually you might be buying commemorative lottery tickets. You can never cash in this lifetime. This isn't even the most terrifying part. Most terrifying is that in this game, not everyone wants the bill to pass, nor does everyone want it to fail. Wall Street internally split into two factions. A war over who owns future currency definition rights is fiercely battling in Congress Hill corridors in ways you cannot see. And Bitcoin, S-price, is their negotiation table chip. Some are longing the compliance monopoly after the bill passes. Some are shorting the liquidity collapse after bill failure. Whichever result, today, S-volatility will be epic. In this battle of titans, you as an ordinary person are like picking up coins between two high-speed colliding trains. You stare at ground coins thinking that is wealth. But in my eyes, that is the trap, the bait, the final reason making you voluntarily stick your neck into the noose. So who exactly pressed this nuclear button on Capitol Hill? Why today? Why at the $100 K threshold? None of this is coincidence. If you think this is just normal market volatility, you are too naive. To see the truth, we need to extend the timeline. See that player always hiding backstage, never truly appearing, yet controlling trillions in global liquidity. Do you really think what is happening in Washington today is just bipartisan politicians arguing over so-called investor protection? Don't be naive. Politics has never been about protecting you. Politics is the dinner table where interest groups divide spoils. And today, the main course on this table is Bitcoin. S pricing power. Let S peel back those high-sounding legal provisions. See what is really happening under the table. Who pressed the nuclear button on Capitol Hill? If you carefully observe lobbying fund flows over the past 6 months, you discover an extremely abnormal phenomenon. Native crypto represented by Coinbase and Kraken. Those who truly believe in decentralization, their lobbying funds were suddenly crushed in the past 3 months. Crushed by whom? By the traditional banking alliance, led by JP Morgan and Citi, and the new asset giants, led by BlackRock. This sounds contradictory, right? We always thought Wall Street accepted Bitcoin. After all, they launched ETFs. They talk extensively about digital gold on television. But this is precisely the deadliest cognitive trap. Wall Street indeed wants Bitcoin, but what they want is a castrated, tamed, caged Bitcoin. What they absolutely cannot tolerate is a truly decentralized free currency that doesn't need to flow through their bank accounts globally. So today, Digital Asset Market Structure Act, DAMS 2.0, isn't any regulatory bill. It is a meticulously planned hunting operation. Remember that Section 303 countless people ignored that I mentioned in Part 1? Let us dig deeper. In this clause, S Appendix hides an inconspicuous amendment added by a senior House Financial Services Committee member late last night. This amendment grants the U.S. Treasury a privilege. After this bill passes, Treasury has authority to define which non-custodial wallets belong to high-risk entities and prohibit regulated financial institutions from any interaction with them. Understand this logical loop. Step 1. Wall Street, through ETFs, sucks Bitcoin from your hands into their vaults. Bitcoin circulating in markets increasingly concentrates in a few major institutions. Step 2, through the DAMS 2.0 bill, label all Bitcoin not entering their vaults. Bitcoin you keep in cold wallets. Bitcoin you can freely transfer as high risk or even illegal. This is financial segregation. Once the bill lands, Bitcoin will instantly split into two types: freezable anytime, clean coin, lying in BlackRock. As custody accounts, compliant, safe, but you have no private keys. You own only an electronic certificate like digits in your bank account, freezable anytime. Fine, dark coin, real Bitcoin with private keys in your hands. It is free. But because it cannot enter fiat systems, cannot be cashed out, might even be rejected by exchanges. Thus liquidity zeroes out. This is why I say $100,000 is a trap. At this price peak, Wall Street is using ETFs as a giant straw, sucking away the last free chips from retail hands. They simultaneously push prices higher, creating buy now or too late anxiety, while on Capitol Hill, they sharpen knives, preparing to cut all retreat paths for free chips. Doesn't this scene feel familiar? Let you rewind the clock nearly 100 years to 1933. During America's Great Depression rampage, President Roosevelt issued the infamous Executive Order 6102. The script then was identical to today. Government said, to stabilize financial order, to combat hoarding. Sounds so righteous, but the result. All us citizens were forced to surrender gold in their hands, exchanging for $20.67 paper currency. Immediately after civilian gold was confiscated, Roosevelt instantly reset gold prices at $35. Back and forth, Government and bankers not only plundered 40% of people as wealth from thin air, more importantly, they completely monopolized gold ownership, making the dollar the only king. Today, the 15th of January 2026, is the digital age S1933 moment. The DAMS 2.0 bill is the digital version of Executive Order 6102. They re not confiscating your Bitcoin. That is too barbaric. Doesn't fit modern civilization. They re just making Bitcoin in your hands illegalized and unusable. They rebuilding a Bitcoin local area network, accessible only through them, Wall Street and government. In this game, who loses? Those geeks believing code is law. Ordinary families hoping Bitcoin hedges inflation. Retail investors still fantasizing about altcoin season. Who wins? BlackRock already positioned with compliance custody licenses. Big banks about to obtain exclusive on off-ramp monopoly rights. Politicians who can completely control every fund flow through taxation and surveillance. This is absolutely not coincidence. Why choose voting time today when Bitcoin approaches $100 K? Because only at this moment are all eyes focused on price, all greed stimulated to extremes. No one cares about those hundreds of pages of obscure legal provisions. No one thinks about what custody means. Like magicians performing, they always use one hand making exaggerated movements attracting your attention, while the real magic always completes in the other hand. Right now, prices sprint toward $100 K. That is their waving left hand. On Capitol Hill, that hand holding the pen, ready to sign. That is the true Grim Reaper, S-hand deciding your fate. So facing this level of encirclement, facing this historic harvest, are we truly powerless to fight back? Since events have occurred, since the bill vote is imminent, the next 72 hours will be the critical window determining your wealth class over the next decade. Some will be washed out in chaos, losing everything, but others can find that lifeline in giants, footprints. In the next section, ILL conduct ultimate tabletop exercises for you. ILL tell you, whether the bill passes or not, as an ordinary person, even if you only have 0.1 Bitcoin in hand, what should you do to preserve this last arc? More importantly, for those sharp-nosed hunters, ILL point out where in this great upheaval lies that overlooked short target sufficient for windfall. Listen, we don't have much time left. Washington insiders tell me the House will begin roll. Call voting in 2 hours. Regardless of today, S-vote result being red or green, that once wild, free, myth-filled crypto Wild West era will actually be declared over this afternoon. We're re-entering a new epoch, the digital Iron Curtain era. In this era, only two types survive. One is compliant slaves, completely surrendering to the system. Another is digital nomads with ultimate survival skills and fence. Sitters still dreaming between these two will be strangled. Scenario projection for next 30 days. Scenario A. Bill passes 65% probability. Gilded birdcage, T0. Vote passes instantly. Market will misread as bullish landing. Bitcoin will instantly break $100 K, even touching $105 K. This is an epic bull trap. TT 24 hours. Exchanges begin massive freezing of high-risk accounts. Previously celebrating retail discovers that though coin prices rose, withdrawal buttons turned gray. Panic starts spreading on social media. TC 30 days, funds frantically diverge. Key IC compliant clean coins trade at premiums while originally on chain-defy tokens unable to comply. See liquidity drought and prices zero out. Bitcoin officially becomes Wall Street. S-toy volatility drops, becoming the next boring S&P 500. Scenario B, bill rejected or delayed, 35% probability, regulatory revenge, 2D0, disappointed Wall Street exits. Bitcoin flash crashes, possibly instantly piercing $90 K. T 72 hours. Infuriated regulators activate Plan B, launching anti-money laundering investigations targeting stablecoins, especially USDT, USDC. This is scarier than bills because it directly drains market blood. Conclusion, whichever scenario, liquidity crisis is the destined ending. Even if coin prices rise to the sky, if you can T withdraw, it is just pixels on screens. Class action guide now that we know the script. What should we do? For ordinary people, survival checklist, if you only have savings without any insider channels, immediately execute the following physical isolation. Actions, final, escape pod. Check whether you use Binance or Coinbase. While the bill hasn't T landed, immediately withdraw your coins. Don't T use exchange hot wallets. Don't T use those phone app wallets requiring online verification. Buy a hardware cold wallet. The completely physically offline kind. This is your only arc in the digital flood. Remember, in the future, only those holding private keys that never touched the internet truly own assets. Construct shadow liquidity. Don T put all eggs in the cryptocurrency basket. When digital assets face comprehensive surveillance, physical gold and silver will become the last anonymous payment means. I suggest you immediately cash out 20% of floating profits, exchange for small denomination gold bars or silver coins. When bank cards freeze, exchanges crash. These weighty metals are your trump card for securing food and safety for family. Cleanse digital footprints. Stop using any public addresses bound to your real identity for transfers. If you must operate, learn to use coin mixing technology, CoinJoin, or switch to more privacy. Focus networks. In this new world, privacy is freedom. Privacy is wealth. For elites and ambitious ones, hunting moment for us bloodthirsty traders, chaos is the ladder. When most panic, where should we strike? Long privacy premium. As Bitcoin gets recruited, funds will frantically seek the next safe haven. Those veteran privacy coins emphasizing absolute privacy and untraceability, like Monero Concepts, will see value reassessment. Logic is simple: stricter regulation, bigger black market demand. The whiter Bitcoin becomes the blacker privacy coins, and blacker things command higher premiums in underground worlds. This is next year's biggest alpha return source. Short, zombie DeFi. Those DeFi protocols completely relying on liquidity mining, lacking actual revenue generation, unable to pass KYC audits, will completely die in the DAMS 2.0 era. Short their governance tokens. This isn't just shorting prices. It is shorting an outdated era, ultimate hedge, long volatility. Don't simply bet on rises or falls. Buy weigh straddle options in options markets. Because regardless of bill results, next week, amplitude will be astonishing. What we re-earning is money from market panic. Friends, this world is drastically changing. The 15th of January, 2026 today will be marked by future history books as the watershed between free currency and controlled currency. Wall Street and Capitol Hill elites. In that white building they toast and celebrate. They think just signing a few papers cages us, turning humanity. This greatest financial experiment into their ATM. They want you to believe that without accepting regulation, you are stuck. They want you to fear that without surrendering private keys, you have nothing. But remember what I say today, Bitcoin doesn't exist because of their permission. It was born to resist their control. Now, turn off your television. Forget those financial anchors. Nonsense. Look at the private keys in your hands. That is the last boarding pass to the new world. Watch what they say. Watch what they do. When even BlackRock frantically hoards Bitcoin, this game just started. But this is no longer that warm. Hearted game. This is jungle law, dark forest. Grip your capital tight, guard your ark, cold wallet.